Okay, everyone. Hi, and thanks so much for joining. We're going to get started here on our April webinar, and I think we've got a great one lined up for you this month. It's jam-packed with different topics, so we're going to get started right away. Just to introduce a little bit about our webinar this month, John is going to start us off, and he's going to compare some creditor life versus traditional term life insurance. And, this could even be a layered solution, but in any case, we want to show you how to compare creditor life versus life insurance. Now, I don't imagine this is a very tough sell for most of you to kind of explain, the price difference and compare the products. Life insurance is by far and away superior to creditor life insurance, but the convenience that the bank makes it when we're actually applying for a mortgage means people often check this box, think they're protected, and really don't really recognize the pros and cons of it. So we want to show you how to set up a case that compares it, and maybe this is a case that you leave on your account, set it as a favorite, and it's more of a concept piece. And John's going to talk a little bit about how you might even use a shared case to put this in a marketing campaign. Next up, we actually have Jeff Minaker from Empire Life, who's going to take us through a couple unique products from Empire, including their 8-pay. We're going to do a little bit of a case study, and we're going to look at their term insurance, or as sometimes they like to call it, stepped term to 100. And then we're going to look at a buy term invest the difference concept. I'm going to host that one, just looking at that same Empire product versus the 8-pay. And then Nick's going to take it away and show you how to tag a case and add a custom title, so that when you're keeping track of perhaps even portfolios from clients, regular cases, and even just different scenarios, he's going to show you a couple different ways you can add tags and custom titles. And then I'm going to wrap up with some housekeeping and updates, and we should be within about an hour. So without further ado, I'm going to pass it off to John. He's going to take you through creditor life insurance versus regular life insurance.
Thanks, Charlie. All right, everybody, so let's get into breaking this concept down. As Charlie mentioned, this is a no-brainer for your client, and having a report built inside of your account that we can pull up whenever we want to explain this creditor versus life insurance example could be a value add to you and just make your life a whole lot easier to sell this concept to your client. So what we're going to do today is we're going to build a case showing these two different options and how we can position this to our clients and pull it up whenever we need to access it. Okay, so I'm just going to build this report now. So I'm going to go to the Add New Case section. And for this example, just to speed things up, I've already created this client. I've called him Mr. Mortgage. So I should be able to find him in my search. And now I'm going to proceed to the Design Case page. So this client that I've created, I made him a 35-year-old male non-smoker. So of that traditional age of a client that's going to be in the market for purchasing a new home. So what we can do from here is add the creditor insurance and life insurance. I'm going to start with the creditor insurance. And for a policy like this, I would highly recommend to go through the Plus Manual section as I'm doing right here. The Plus Manual allows you to add in any policy that's not available inside of our quoting system due to our Life Guide affiliation. And remember, if you are a Life Guide subscriber, you are entitled to a 50% discount of life design analysis. So feel free to take advantage of that if you are a Life Guide user. But where I'm going to go to for this example is the overfunded UL section. Now, the reason why I'm selecting overfunded UL is because this area allows me to enter in a different insurance benefit and premium amount year over year. So this is great for YRT insurance or something of this mortgage insurance example that we're working with right here. So what I'm going to do next is I'm going to go to the Paste Spreadsheet Data option that I'll see underneath where it says Overfunded UL. And that's going to take me to this page where it will allow me to enter in the insurance premium as well as the insurance benefit year over year through either manual text or in the form of a spreadsheet. For this example, I'm going to use a spreadsheet that I've used to create the annual premium amount and the total insurance benefit and the changes that are going to be occurring based on the formula that one of the major banks offers. So I'm just going to access that spreadsheet now. So I'm just going to open up Excel and I can see that here. Now you can see with the formula that I'm using, it's going to be showing a increase in insurance benefit and then followed by a decrease as the client gets older and the mortgage reduces, as well as the reducing mortgage amount right here. Now some will see they have a level amount all throughout the age of the client. Feel free to use which example the bank you're comparing against provides, but any of these options can work. So what I'm going to do here is I'm going to start off by highlighting the entire column here for the annual premium from year 1 up until year 24. So what I've done is I've just highlighted this column, and now I'm going to proceed to copy it. So I'm using the Control and C key on my keyboard, and you could see that by how it's moving around the area of the column, that means that it's copied. And now I can bring it back into Life Design Analysis. To do that, I'm just going to take my cursor, click in the year 1 area, and use Control V, or I can right click and paste. And now I can see the premium numbers entered in from year 1 all the way till year 24. I'm going to do the same step for the total insurance benefit now. So I'll go back to that spreadsheet that I have here, and now I'm going to highlight the total insurance benefit for this creditor or mortgage insurance. Right click and hit copy, or Control C as I'm doing myself. And now I'm going to bring it back into the total insurance total insurance benefit section, and paste it in this area. Okay, so now we have that entered in. You'll notice here though, certain sections have an asterisk, so it is required that you fill in information in those areas. Because we're not working with a cash value, obviously, for this type of policy, just enter $0.00, and that will bypass that, so you don't have to enter in that total cash value. So once we're done entering in those sections, proceed to click on Upload, and that will bring in those numbers into this policy on the design case page. From here, the last step when entering in the creditor mortgage insurance is that you want to change the name so it's labeled as that on the report. For those of you that don't know, it's as simple as clicking on this Edit Plan option. So I'm going to select that button, and that's going to allow me to change the name of the policy or add a description. For this example, I'm just going to change the name. So I'll call it Creditor Insurance. And now I'm going to just hit save. All right, and now it's applying that name change to the creditor insurance, and now it's ready to show on the report. The next step we're going to do is we're going to bring in a term policy to compare against this creditor insurance. Now to do that, I'm just going to simply click the plus term icon, and I'm going to search for a policy through this plan specifications page. So I'm going to say the insurance benefit is $500,000 to match that creditor insurance, but because we're working with a 25-year need, I'm going to select the 25-year length term insurance for the search I'm doing here. I'm going to leave everything as is, click on search, and I can see here that we have RBC, we have BMO, quite a few other different options on here. So what I'll do, I'll just choose the BMO insurance. So I'm going to select that by clicking on Add to Case, and that's going to bring that policy onto the design case page. So now we can see we have an example where we're working with the life insurance as well as the creditor insurance, and now these will be on the report once we click Generate. Now, before I generate this report, I would like to recommend that for your own personal one that you do customize it to make the case work better for this concept that you're working with. In order to speed things up, I've already gone about to do so I've changed my report components to match what I want to show for this concept, and I've also added in to the report notes section the same text that Charlie uses in his sample case that's accessible within our blog post going over the mortgage insurance need. He has an interactive case that you could take a look at, and as you can see here, I'm using the exact same title and text word for word as what he did. So feel free to do the same yourself, or what you can do is use your own language, whatever you prefer. All right, so let's generate this report now, and we'll see what we got. Okay, so first page I just added in the cover, so feel free to do the same yourself, and make sure you load in your logo and all your contact details if you haven't already. If you need assistance with that, just let us know. Here's that report notes section where I use the same language as Charlie did in his sample case, but again, this can be customized to enter in your own language if you'd like. And here we have a sum of premiums page where we're comparing the total cost year over year between the creditor and life insurance. And obviously we could see that there's a drastic difference in price between the two of them. So by the end, we're almost doubling the amount that we've spent on the creditor insurance compared to the term insurance. And as we could see on the next page, because we're using the overlay, combining those two benefits on one page to show a direct side-by-side comparison, we can see that decrease as time goes on with the creditor insurance, plus that benefit's not going to the insured, it's going to the bank. So with this, there's the extra value add, and if a claim is made, the extra amount could go to the family, but it's staying level throughout the duration, whereas we're not paying more to receive a smaller insurance benefit as time goes on. So that's the look of the report right here. Again, you can revise it to any type of situation. This is more for a sample case example that you can pull up at any time. One other thing I would recommend doing with this type of report is utilizing our interactive case sharing feature and taking this link to copy and paste it in either a mail campaign or a social media campaign to share it to some potential prospects to make them aware of the difference and to open up those conversations with them. I'm going to go back to the design case page now, and what I would always recommend doing with this type of case is to save it as a favorite so you can access it very easily within the Manage Cases section, or even to take advantage of our new labeling options, which Nick is going to go over later on. All right, so I'm going to pass it back to Charlie. Thank you very much, everybody, and enjoy the rest of the webinar.
All right, John, I think that's a wonderful concept, and thanks so much. I agree. You know, that's one of those ones we want to set up as sort of a placeholder. It may not be something you want to build for every single client, but definitely a good concept to have on hand. And as John mentioned, set one of those up as a marketing campaign, and you'll really draw out those people maybe who do have that creditor life insurance versus true traditional term insurance for their mortgage. Next, I'd like to welcome Jeff Minaker to the Life Design Analysis webinar. Now, Jeff, for those outside your territory, maybe tell us a little bit about yourself and your role with Empire Life.
Perfect. Thanks for having me on, Charlie. And so I am the insurance wholesaler for Empire Life, covering Southwestern Ontario and Northern Ontario. My role is to work with independent financial advisors and help them find out where Empire Life fits into their practice and where we really are at our strongest. So certainly that's where LDA kind of fits in. It's a tool that I've been using to help me do that.
Yeah, so tell me a little bit about that. You've been using LDA, it looks like since about January 2015, if you can actually believe it. Tell me a little bit about your role as a wholesaler, how LDA fits in, and how you're using it to kind of highlight product and really help your clients, which again are advisors, with our reports.
Yeah, so Life Design Analysis allows me to have a better understanding of where Empire Life's products and features kind of fit in amongst the marketplace. It allows me to be prepared so that when I walk into an advisor's office, I have our most up-to-date information as far as where we are in regards to price, cash values, other features that may be relevant to that advisor's practice. And it allows me to print out a specific report to show them that.
Nice. And sometimes, I hear from a lot of wholesalers that sometimes having it sort of validated in a third-party application is great. Today, we wanted to talk about a couple different products on Empire Shelf, and specifically your term product, and we're going to focus in on an 8-pay product today. I know you have a little bit of a deck, so let's run through a little bit of product information here, and then we can get into building a little bit of a case.
For sure. So I'll give you a quick overview of some of the products that we wanted to talk about, kind of really where we're at our strongest. I have titled this Back to Basics just to give you kind of an idea of what we want to talk about. It's nothing really groundbreaking, but what it is extremely relevant to casework that advisors may be doing. I did want to put up my information there, so if you do have any questions, you can call me directly if needs be about anything that I talk about today. So really, in an ever-evolving industry, what do your clients continue to seek? And really what it comes down to is the right price, guarantees, simplicity, and flexibility. At the end of the day, though, value is going to be still the underlying feature that's going to be looked at most. Really the why I should pay for this product. One thing that Empire Life does better than most other carriers is it provides that value across the board. So when we look at things like term products, one of the easiest things to say is term across the industry. Well, with Empire Life, that's not really true. Our term never expires, and that makes us unique in the industry. We do also offer Term 100, we call it a non-participating whole life product that offers extremely high value for costs that are comparable to a minimum funded universal life contract. As well, one of the other value-added pieces from Empire Life is the 8-pay participating whole life that we launched about a year and a half ago. And that product has taken on kind of a life of its own and found its place into the market and in a number of ways that we will talk about going forward here. So to talk a little bit about the Solution Series term products, and again, we can see this better when we do use a program like Life Design Analysis, because you can see how this stacks up against other carriers out there, and how this feature of never expiring really comes to life. So we do offer Term 10, Term 20, Term 30. All three contracts are essentially permanent coverage. There's no expiry date. It's paid up at age 100, and it does turn into a guaranteed T100 rate at a specific date. Now, you'll notice a couple of little charts on the right here. The first one is to kind of show you where our Term 10 and our Term 20 level off. Now, a couple of important dates. On our Term 10, the coverage will automatically turn to T100 on the first renewal after age 75, and for Term 20, it will be the first renewal after age 65. We'll illustrate that in Life Design Analysis, and you'll see a lot better how that Term 20 sweet spot comes to life. But essentially, if you take nothing else away, our Term 20 at Empire Life is really hot above age 46. So 46 and above, that's where you want to look at our product. Great entry rates and this feature where it'll turn into a T100. As well, we did launch a Term 30, and keeping in with the new trend of YRT renewal rates, what you'll notice is our T30 will go for 30 years at a guaranteed rate, and then it will start to increase on a yearly renewable term basis each year after that until age 85, when it does go level till age 100. Those YRT rates are guaranteed in the contract, and you can see that on the illustration. So some of the features that Solution Series term products are going to offer, as we've already talked about, conversion privileges prior to age 75. We have Term 10, Term 20, Term 30, and an exchange feature between the 10 and the 20 and the 30. One other thing I'll mention here is all of these products can be bundled together. We can save policy fees by putting them all into one contract. You can have some Term 10, some Term 20, some permanent coverage, some critical illness, all within one plan, and make it simple for your clients to build a solution. All premiums and renewals are guaranteed, and guaranteed coverage for life. That T100 rate is truly gold, and we'll talk a little bit more about how it fits in. And as far as price goes, our term rates, our goal is to be in the top 5 across the board when we're talking about our term 10 and 20 and 30 coverage. I will talk a little bit more about our fast and full process as well at the end, just touch on that after I talk about our 8-pay product.
So I think that's a great place to start. So let's flip back to Life Design Analysis here, and we're actually going to start setting up our sample case. So again, I'm going to go ahead and add a new case here. I'm going to start actually with a brand new client. Again, so I'm just going to enter the name here. I'll just go with Jeff Test. Hopefully I haven't created you before here. Again, we could give a company name, birth date. We're going to leave that blank. We're going to use the age override to actually force a date. I would recommend putting the client age in there. Again, any kind of contact detail is saved to that client record, so any future case that you create is going to have that detail in there. Again, I'm just going to make mine a male. Feel free to add any additional details. Ours is going to be a non-smoker. Of course, you can enter all that additional information in there. I'm going to click Save, which is going to actually save that client to file, and then I'm just going to hit Continue. And this is going to bring us to the design case, kind of a blank slate where we can sort of create any sort of product comparison. In our case, though, we're going to look at specifically some of that Empire term option and really explore sort of that sweet spot above age, I think 46, you said, Jeff, and really look at how that compares out over time and how you can use this strategy. Initially, I'm thinking this goes well with something like even a term reissue where, in best case scenario, we might buy a little bit more term in the future. But again, if health is an issue and we're age 60, it's nice to have that T100 option for our client. So let's go ahead and get this set up. So we're also going to add a client age override. So I didn't set the birthday. I'm going to go with the T20 example. So I'm going to pick that our client here is 46. And this is probably someone who's potentially had term insurance before, life insurance, maybe second, third purchase even. And again, we want to show that term 20 and the value, and sort of, I think about that kind of option in the Empire term thing as your parachute. Again, this client at 46, if he goes with a T20, 66 by the time that coverage is about to, you'll have the decision whether to lapse it, or again, at least you'll have that option or that parachute. So let's take a look at how that looks in the report. So I'm going to go with a $750 insurance benefit. But of course, this works with any sort of face value. And I'm just going to go ahead and hit the plus term button here. Again, remember, whenever you're searching term rates in the system, we are directly interfacing with LifeGuide. We do have a partnership with them. And again, LifeGuide subscribers do get a 50% discount, so keep that in mind. I'm setting my term length here to 20 years, and I'm actually just going to say all companies and survey the entire market. And in this one, what I really want to do is I really want to look at that provision. So again, we have companies like UL Mutual at the top. We've got Manulife, about 1% there. And Empire, again, really, really competitive, even off the bat. I mean, they're 2.7% higher than the top result. But again, what we really want to show is not necessarily that price difference, but the value that provision adds of going to a level 100. So all I'm going to do is say add this to the case. It's a good time to highlight, though, as Jeff mentioned, that exchange that some of these products have, being able to switch between a 10, 20, and 30. If you did want to exercise one of those exchanges, you can also do that. And again, in the sake of this kind of comparison, I'm just going to go ahead and research that term market, and I'm going to put it to maybe a slightly lower costing term 20. So I might pick on that Manulife one a little bit, especially knowing that it only goes to age 80. So again, I'm just going to say add to the case to that vitality here. So once we've got them in there, you can see, we're analyzing this because we have two term 20 products. The analyzed years kind of automatically sets itself to 20. But again, we want to look at this long term and just show that parachute option, as I'm going to call it here. So let's generate the report and see how these two products compare. Okay, so we've got our LDA report, but Jeff, why don't you walk me through this as you would showing an advisor here? So again, of course, I'm going to skip by our beautiful cover page and our title, but let's get into the meat of this presentation here.
For sure. So this will highlight very well the difference between Empire Life's Solution 20 and really any other carrier. Manulife's being chosen just because they have the best rate going in this market. But let's take a look at that. So for a marginal increase in premiums over the first 20 years, what we'll find is that by year 20, the Solution 20 is going to have renewed, and it's going to have renewed to a level cost till age 100. So don't focus too much on the price here, because the price difference is really apples and oranges. We're talking about a product that's going to expire at age 80 versus a product that's going to continue on until it's paid up at age 100. The important thing in here is that these rates are 100% guaranteed. So when your client, who was 46 when they purchased this term 20, gets to this age 66 part, and hopefully they've been able to convert prior to this year, but as Charlie pointed out, this is really a parachute or a safety net option. So they take this rate at age 66. Well, their situation has likely changed. They've potentially retired. They've potentially downsized their home. The kids have potentially left the house. So now their permanent needs may not match what their term needs were. They may not need quite as much insurance anymore. What we can do that's unique again in the industry is, because that rate is guaranteed, is we can illustrate them reducing the coverage at age 66 down to maybe 500 or 250,000 and guarantee them the coverage they would, what the price they would pay for that coverage at that age.
And again, what you might think about is adding something to that effect in there as a report note. So again, I might add a little report note here and just add a custom text call out and say, like, this is your parachute. I'll spell it right when I send it to a client. So again, I could save that and just add it as a kind of a tooltip. And again, it might be my option if I want to exercise that and use that. I might want to reduce it at that time. And again, we talked about a little bit about that exchange option. When we do search for that term 20 product, again, we do have some options there. I'm just going to skip down here to Empire. Hit search. And I just want to show you when you are illustrating this. Again, you can add the guaranteed renewal, that T100. This client may be healthy. You could always add it as a reissue as well. So again, just know that when you do add it as a reissue, that will add it, and then at that renewal point, again, assume that the client is healthy and add it with the rate at that time. Again, it's assuming current health and current pricing, but again, it's a good estimation of a potential solution. Now, what I really want to do with this case study is actually dive right into the 8-pay. So I'm going to go ahead and add an 8-pay for a 46-year-old male at $750,000. Again, it doesn't necessarily have to be the full benefit. If you want to reduce that price point, you can do term coverage and kind of layer that in there. It might even be the enhanced kind of dividend option that you'd look at. Really, anything can illustrate. But let's take a look at, I want to look at sort of the Empire Life full 8-pay and just sort of see some of the strengths there, where we might use it, and some of the advantages. So I'm just going to select it from our list. And again, I'm going to draw up an illustration here. So I'm going to go over into the Empire Life illustration software. I'm going to make sure I change my client age here to 46. I'm going to set my coverage here to 750. Just want to change to the 8-pay here. And I also want to make sure I'm on paid up edition. I mean, feel free to use any different dividend option. I think, Jeff, you'd probably agree paid up edition is probably by far the most popular, with enhanced kind of the second.
Yeah, I would agree with that.
So I'm going to choose paid up editions. And again, I'm a big fan of annual if you can do it. And we're going to go Optimax as well. Now, I'm going to put my base coverage as the full 750, but feel free to adjust accordingly. I'm just going to double check my premium here. Okay, perfect. We've got 40,000. So again, this is definitely a product that, has a higher price point, but I always say, price only matters in the absence of value, and that's what we really want to highlight to our customers. So let's bring this product into LDA. We're going to click the View Data button. We're going to export to Excel as we normally do. And again, if this process looks a little fast to you and you're watching for the first time, again, we have individual videos on this, so don't feel you have to learn this all at one time. This essentially gives us a spreadsheet of all of those values. And again, I always like to scroll over and show that there is a sea of information in these spreadsheets. Instead of leveraging and picking through them column by column, LDA allows you to select everything. I'm just going to do a Control-C or a copy. I'm going to come back to our software and paste that entire spreadsheet in there. And again, if you're not comfortable copying and pasting, you can also save that whole spreadsheet and just drag and drop it in there. Again, if you run into any snags, don't ever hesitate to ask us a question on our live chat. Now that we've brought it in here, though, again, a great opportunity to compare this Term 20 to our Empire Life 8-pay. And again, remember, you can always add additional details to these plans. So because I'm really going to be focusing and I'm really going to want to sell this whole life product to my client, what I'm going to do is I'm actually going to edit the title, and in the description here, I'm actually going to grab my Fast and Full application. So I'm going to come over here, and this is just the test site for Fast and Full. But again, remember, you can incorporate things like links to e-apps. So if your client, when you're presenting the material, says, yes, that's the one I want to go with, again, you can transition really easily into an e-app. And again, Empire Life even has e-policy delivery now. Is that right?
Yeah, so we do have e-contract delivery. It's really one of the only processes in the industry that goes from start to finish with 0 wet signatures.
And again, that's really convenient. I posted out something the other day about e-apps and how you could increase your penetration. A lot of people expressed, the desire to not, even if it was a term policy, not run across town. But I heard a lot from people who had sort of physical limitations who said, something where I could share and remote with my client and do more non-face-to-face would be really beneficial and allow me to sell more insurance. So a lot of advantages to that process. Now, I'm going to delete the Manulife out of here. We already know that our Empire Life T20 was a more versatile product, including that parachute. But let's do a little bit of a term to a permanent kind of comparison here and take a look at where this 8-pay fits. One of the report components that I want to turn on here and really focus in on is an immediate finance scenario. And ours is designed around a corporate finance scenario. But this would be for someone who maybe wants to borrow that premium and maybe use the corporation to leverage and kind of, again, with very little money out of pocket, they're going to, again, see a lot of value in that policy. And again, ultimately the plan with these IFAs is that the cash value builds up and it eventually pays off the principal of that loan. But we'll take a look, and maybe, Jeff, you can speak a little bit about on the IFA and how you're seeing it being used with these 8-pay products. All right, so let's take a look at the report. Again, I'm going to go past the mission statement. You guys can set that up and customize it on your own. Again, we've got a little bit of a different premium schedule here. Of course, our term 20 is the same premium as before, and we've got that 8-pay in there. And again, I don't like consumers necessarily to get too focused on this sticker shock of 40,000. I sort of mentioned before, price only matters in the absence of value. Let's get right into showing value. And again, this is a great visual. We do see how expensive it is, but we've already put all of that money into this policy by year 8. And we added that IFA, so that, again, if it is a business owner, that's going to be an interesting conversation to put all that money in before they're 54, before they're even thinking about retirement. Take it off that balance sheet. Again, with the term, they see they've got that parachute, and again, it was a great T100, but again, even if we look at the sum of premiums, and I'd be confident to even PV this with a really, really strong discount value and still be able to show that kind of value. So one thing that I really hear from advisors is that they love showing this break-even point, and clients really like seeing it. So again, make sure you're leveraging that interactive presentation here. The other thing I like showing is just that, again, the 8-pay is a fully guaranteed 8-pay. So again, I'm going to focus a little bit on reduced examples. Jeff's going to talk a little bit about how that matters, especially with an IFA. But again, I just like showing that, you're guaranteed that premium's not going to change. And again, if you can show that long term and make people think about the big picture, again, that gun of it's too expensive has come out of our hands already. And again, this is sort of, I think about it in LDA as that 1-2 punch. So 1, I prove that long term it's more affordable for you, and 2, I hit you with look at the cash growth. And again, red here represents what we've put into this as far as premium deposits. Green, cash value, and it's not hard to see the value in this product. Again, feel free to look at it on a reduced example. You can see that premium stays the same. If we look at the reduced cash value, again, still incredibly strong, especially relative to what we've deposited. And even on a guaranteed basis, again, if we want to handle that objection and guarantees are important to our clients, it's not very long. We can see we're guaranteed $321 in deposits, and I can guarantee that client back that money in year 12, regardless of what happens with the dividend. So again, if guarantees are important to your client, again, long-term, 1-2 punch, more affordable. 2, I guarantee you get your money back. Same sort of thing with the insurance benefit. Again, that's what it's after all is all about. I love watching this $750,000 of face value grow. Think about adding maybe a tag around life expectancy. I think most people kind of tend to think about life expectancy in terms of age 85. Probably a little bit younger for this, but we don't necessarily know. So think about adding a note there. And again, you can use a credit to the CDA if this is a business owner. Now, again, one of the things I wanted to just point out before I hand it over to Jeff a little bit is the presentation summary. So one of the things, even if we looked at this term 20 in terms of cost and said, even at the 20th year, it's $290,000 more expensive. Again, we know long-term we're getting less and less expensive as those premiums have stopped, right? Each day it's getting more and more affordable, more and more competitive. But I always say in the 20th year, look at that premium deposit difference. So we've paid roughly $300,000 more. And if we scroll down to year 20 here in the cash value, you can see we've got $563,000. So would you not? I think almost anyone would pay $290 for $563 as long as they had access to that capital. And again, let's not ignore either the insurance benefit at that time, ever increasing. It's up by over $250,000 there, and it continues to grow and grow and grow all the way out to life expectancy. Now again, cash flow, we're always, trying to hold on to our cash, keep as much cash in the bank account. Well, if cash flow was an issue, or if this was a business owner, one thing we may want to explore is this collateral finance scenario. And we'll probably touch on this a little bit more on its own individual topic. But Empire Life, I know, has a great product for this because there's so many guarantees built in. And I'll have Jeff talk a little bit about this. I just wanted to go over what we're actually looking at for those of you not familiar with an IFA or an immediate finance arrangement. So what we're looking at is we're going to borrow the premiums inside of a corporation, and as a result, we're going to be able to write off the financing costs. So what we're showing you here is the sum of the loan is essentially the premium as it accumulates, and we're borrowing it all the way until year 8 when we're done paying that for that premium. So again, we're going to total borrow $321,000. Now, each year, we're going to incur the interest, but then we're going to get to deduct it at the end of the year. So business owners are able to deduct the interest and the NCPI. Now, the NCPI deductibility is actually a proportion. So it's relative to the sum of the outstanding loan and the insurance benefit. And again, we take that into account for you in LDA. So we show how much of that NCPI you can actually deduct. And you can see as the NCPI, or as the loan grows and the NCPI grows, it's a greater portion that you can deduct. This basically brings us to our net financing cost, which is essentially the sum of the total loan minus this deductible portion, because interest is basically added then netted out. And again, ultimately what we're looking for is that once the cash value in the policy grows, and we can see here it's roughly around year 10 that we have enough cash value in the policy to wipe out that principal of the loan. And that's sort of the concept of the IFA. So we borrow the premiums, we deduct the interest in the NCPI, and then at some point we pay off that principal with the cash value in the policy. So Jeff, talk to us a little bit about how this 8Pay is being used in the market and why it's such a good product for that.
Yeah, thanks, Charlie. Yeah, the immediate financing arrangement has become extremely popular. At least it's being tabled far more often in 2018 than I've seen in the past. And part of the reason is introducing the 8Pay. Another large reason is Empire Life has partnered with Manulife Bank to be our lender. So they're actually probably the foremost bank who's doing these immediate financing arrangement loans. When it comes down to the IFA, some of the important pieces of the puzzle are this is a riskier strategy, and by having a product like an 8Pay, which is a whole life policy, it brings a lot of guarantees to the table, so it mitigates a lot of that risk. One of the key features is you got guaranteed 8 payments at $40,000 in this scenario, so you know that's locked in. Make your 8 payments, you know how much that's going to be. The other piece of the puzzle is the guaranteed cash value makes up over 90% of the total cash values in those first 8 years. So there's very little dividend rate fluctuation that we have to worry about. So yes, we should illustrate at less 1 or less 2% to see how this is going to run long term. But in the early years, when you're at your riskiest, making those payments and getting those loans paid back to you, you've mitigated some of that dividend rate risk. I do like that LDA has a built-in 5% finance cost. When you are applying for an immediate financing arrangement, Manulife Bank will not take an illustration that's less than 5%, even though that you're probably lending in the low to high threes, depending on how much the sum of the loan is. Obviously, the larger the loan, the lower the rate. So when we are setting up these immediate financing arrangements, what we're seeing with the 8Pay, where it has an advantage in the industry, is those guarantees already mentioned. One of the other key factors is in order to loan back all of your premiums in the first year, you need to put up additional collateral. If we look at the first year, for instance, you can see that the sum of the loan is $40,160. That's our total premium, and the total cash value in that year is $18,337. So in order for the bank to say, okay, we'll loan you back $40,000, they need to have that same amount as collateral. So you're looking at putting up an additional $22,000 or so of additional collateral from another source. Could be another whole life policy that you've set up in the past. On top of this. Now, because our guaranteed cash values are so high, and in fact, Charlie pointed out, by year 10, our cash values equal the finance that we've taken out, equal the loan. By year 10, typically, our collateral requirements have completely come off the board. There's no additional collateral required by Manulife Bank, and the policy can sustain the concept on its own. That's a huge relief for a lot of people who might be looking at these scenarios. For instance, people who need cash on hand. For instance, farmers might be a good example of that, or other small business who need that cash invested in their company and maybe don't want to have a lot of other assets tied up in this concept.
Fantastic. And just in case anyone's wondering, if you do want to flip over your finance scenario or adjust that interest rate, again, Jeff mentioned 5 is the minimum. That's what we have our default in the system too. But again, of course, you can illustrate this at a reduced rate. So again, we can always change the example type to reduced to even make that a little bit more conservative. And again, you can see on our financing, we do set it to 5%. But you can always adjust it upwards if you wanted to adjust that financing rate. So you can see it right there. And again, from when I've seen these structured, a lot of times the business owner who's involved in this, is really concerned that the loan is going to be called. And I think that's a huge advantage to the 8Pay. So, I really do think that's a sweet spot is where it fits in. So I think that's good for our topic on the Empire Life 8Pay. As Jeff mentioned, his contact details are right at the front. We record these so they are on YouTube. If you do want to get in touch with him for any more info, definitely ask. And we're going to move on to our next concept, which is actually going to be doing a little bit of a buy term invest the difference. So I'm going to explore, again, not only do we look at, the better value, but I'm going to say, what if we invested the difference in those early years and take a look at, are we able to, and basically what interest rate do we need to make that a competitive or a viable solution? So let's take a look here now. So when we're setting up a strategy like this, there's two critical elements. The one is that we have a whole life or permanent product with a cash value to it. And two is that we have some sort of product to invest the difference against. Now this could be a UL, this could be a T10, a 20, as we've got right now, a T30, really any other sort of product, but we do need that discrepancy of what we're investing the difference between. Now, as you can see, is when you go into this, in our case, an Empire Life 8Pay, into the edit button, this is where you normally change things like the name. So again, you can add extra detail. This is where we added that link to test fast and full. So again, if we were actually doing this, we put the link to the e-app if we want to be able to fulfill it that way. This is where you can add things like issue dates and even policy numbers if we're comparing an existing policy, or even the insurance benefit if we're comparing different kinds of face values. But the thing that I wanted to focus on today was invest the difference plan. And you'll see when you have those kind of two conditions met, one, a cash value plan, and you go into the edit of that plan, you'll see that you're able to select from any other product added. This even includes things like hidden plans. So right now I only have one other plan in there, a Solution 20, because that was our previous comparison. But I could even add a T10 and hide it from the report, but still use its data. So any other product that's been added, regardless of whether it's shown, you can use that data to invest the difference against. And again, as I said, what it's going to do is it's going to take the premium deposit difference between this plan, in our case the T20, and the Empire Life, and it's going to invest them at a rate that you specify. So first I'm going to tell it, that's where we're taking the difference from, so it can run that calculation. And then the other thing is I want to specify, the net rate of the buy term invest the difference metric. So you can see right here we have a net rate of return. And the reason we use a net rate is because, again, you could be investing this into, a TFSA or something of that nature, which may not be subject to tax. So that's why we don't put it in with the existing tax rates. I think most clients, though, this is particularly true, especially in the high net worth market. Usually you lose half to tax. So feel free to even do things like, you could say 6 times 0.5 if you wanted to do, sort of a tax bracket in there. So feel free to use all your tax brackets as you normally would. You can get a listing of them in our existing rates, but we do use a net rate. So important to let that go or note that in there. Now, I'm going to focus on a 3% net rate of return. I think 6% is fair. I know, most clients actually think that they're going to earn about 10% in the market. And, if it's your traditional, stock portfolio, GICs, things like that, we're going to lose about half of that to the tax man. So I use, a 6%, and I say we're going to actually keep 3 of that. Now, feel free to adjust this, and you can be more aggressive. Maybe we'll use something like a 4% rate of return. Now, the other thing we want to make sure that we have checked off is at the bottom down here, I will have it defaulted because it's one of my default report components, but there is a buy term invest the difference section, both table and chart. I'm going to include both of them, but I'm going to take away a few of these other charts out there just to clean up a little bit of the end of my report. I'll take away this finance scenario as well. So basically, after our presentation summary, we're going to go into a buy term invest the difference. Now, to me, I consider buy term invest the difference a little bit more of an objection metric. So, it's not one that I'm going to do on every case, but maybe I have a client who's, more prone to their investment side, or maybe they're being influenced by an investment advisor and we're fighting for a share of the pocketbook. I was always told that insurance is not an investment. However, par as an asset class is certainly a viable strategy, as pointed out by people like Wayne Miller at Sun Life and things like that. And I really believe that. I think it is kind of a very versatile tool for not only accumulating cash value that you can use tax advantaged, but it also provides that insurance benefits. But, again, if you do come up across a client who is, sort of vetting, getting term insurance versus and investing that difference versus buying permanent, you really think permanent fits them, this is definitely a strategy I would look at. So, again, we've got our same Jeff test report. Again, we've got our premium schedule. And to me, again, I really love this kind of comparison. I really think, one, it proves that long-term it's more affordable. But some people would say, all this area under the curve is potential that we could take the difference between these products and actually invest that money over time. So, again, let's take a look at it. The big key thing is that we're going to have to beat the cash value that's in there. And then again, at some point, because we're going to hit this renewal at, year 20, that's certainly going to eat into any sort of investment. So we'll be really curious to see from year 21 forward, all the way up until sort of life expectancy, if this strategy was viable. So again, I'm going to go down through the cash value, through the insurance benefit. I've got a credit to the CDA on this one if they were a corporate client, and I've got that presentation summary that's going to kind of outline those costs. Now, as you can see in these early years, this first year, because the premium deposit difference is so large, we'd actually have $38,632.50 to actually invest. And again, in our case, we put our net rate of return, so we're netting that deposit difference, and this is sort of how it looks here. So this is at 4%. We might need to make that more aggressive. You can see though the cash value is very close. So even if we take that difference and we invest it that first year, we're going to have $40,000, $40,177. So you can see we took our 38 and we ran it through an accumulator, and again it earned net 4%. So you can see by the end of the first year here, and we can look at this more in the table, that we would have had $40,000 if we had just bought the term insurance and invested that difference. Now, the Empire, though, again, it's pretty good. It's got $18,337, but the other thing I like to point out is that we also have the insurance benefit. So again, when we look at the total insurance benefit of the both of them, we're going to see, Empire's unique in this, but it's not growing the insurance benefit. It stays level there. So there also is that element to it. Now, I wasn't expecting this one to be that easy, and you know what, maybe 4% is not fair, because the dividend of the policy is even that much higher. So you know what, let's go back and let's try and adjust this a little bit more. And again, maybe let's go with that client's unrealistic expectation. Maybe let's just say they buy term and they do really well in the market, and let's just say they net 6% of the difference. So basically, this client is going to have to make 12 in the market. Again, we're just going to go ahead and generate the report. It's going to take any of those changes saved, so it's going to adjust that interest rate. And again, I'm just going to scroll down really quickly here to our buy term invest the difference and just show how it's adjusted that chart. So again, you can see at net 6%, if we can consistently make 12 in the market, you know what, we're going to do pretty well. We're pretty much going to keep pace there with that whole life product. So just showing you, what kind of rate of return you'd have to make. But again, I always like to bring it back and say, you know what, it's all about insurance. And again, when we look at the insurance benefit, Empire's nice here because, again, it does go to 100, so it sort of takes away that objection. But again, the difference in the insurance benefit is also there. So, a good strategy, certainly a better buy term invest the difference product, knowing that it actually goes to age 100 versus your traditional term where you would lose the insurance, around age nearest 80 or 85. But again, an excellent strategy, and feel free to use those sort of call outs on these reports as well. So again, if you wanted to kind of highlight the crossover point, feel free to add a little report note on these, and again, add a little bit more clarity to them. So that's buy term invest the difference. I'm going to turn this one over to Nick, who's going to take you through our new feature of tagging cases and adding custom titles. So Nick, take it away.
Thanks very much, Charlie. And yeah, like Charlie had mentioned, we're going to be taking a look at the new feature we've added here, where we can actually incorporate tags or names to identify cases for a particular client or for a particular purpose within Life Design Analysis. Now, this particular feature, we can use it for a number of different purposes. This could be to identify several different scenarios we've prepared for a single client that we're then going to propose to them, or this could alternatively also be for putting together a portfolio of different components within Life Design Analysis, so then we can actually group those together and navigate through LDA a little easier and find those additional cases. So what I'm actually going to do here is we're going to go back to the design case page for this particular case, and I'll actually show you where it is you can add these case names or titles. So for example, in this case, we've dealt with a Empire 8Pay and a Solution 20, but if we wanted to add a tag or a name to this case, we can see here, this case name. This is going to be searchable within the Manage Cases page. And we can also add a case title, which will be added to the report itself. So if we're wanting to actually separate out different examples for a client and have them searchable within our Manage Cases section, we want to add that into case names. So for example, this could be Empire 8Pay And in the title, we could add anything else we wanted to throw in there that we want included in the report. For now, I'm going to hold off on that. But if we go ahead and actually save this now at the bottom of the screen, we saved that successfully. Now, if we go to Manage Cases, we can actually search for this particular case that we're looking for. So you can find that in case name. And if we just type into the text bar here, Empire, should be able to pull this up right here. There we go. Perfect. And so we can do this with a number of other cases as well. Like I mentioned, we could go through and actually identify an entire portfolio that a client has put together just by actually adding these tags here. Now, in order to actually put a portfolio together, say for a client who's got a number of different policies with us, and we've got these actually added in as cases within Life Design Analysis, now what we can do with these case names is add in and identify that particular client within the case name, and we can then search that within Managed Cases. So for example, here, I've got a client with a couple of cases identified just with the case name portfolio. So if we type that into case name, we can see here we've got 3 different cases here where we've got a number of different policies worked into those cases. Now, this is how we can actually organize a number of different components of a particular client's portfolio and actually make it easier to navigate and then search within your block of business just to make it a lot easier to navigate through Life Design Analysis itself. Now, like I mentioned before, there are 2 factors to this new update that we've added here. One that we've touched on here, which is the case name, but also what we can touch on here is using case titles. And so if we go back to the case we were working on initially with that Empire 8Pay, and we actually go back and view, we can see that here we can obviously we've had that case name here, but if we wanted to add a specific title to identify this particular example for the client, so this could be pointing out maybe we're looking at an Empire 8Pay in this example, and we're looking at a Canada Life policy in another example, presenting maybe several different scenarios to a client. Here we can actually identify that, and it'll be represented in the report itself. So if we go ahead, we could put in Empire Life 8Pay and go ahead and actually generate this report. What we'll find is we'll see that reflected in the report itself. And so we can see that just below the logo here. And just makes, again, for another added kind of more customizable and a much cleaner look to the report where we can identify those differences between several different scenarios. And that's really kind of the general wrap-up for the added feature that we've rolled out within Life Design Analysis here. So don't forget to check that out yourself and be sure to try out either adding case names or case titles to actually see how useful that can be for yourself. Thanks everyone for listening in onto my portion of this month's webinar. I'm going to pass things back off to Charlie, and he's just going to wrap things up with some general announcements and housekeeping for the remainder of the webinar.
Thanks so much, Nick. And yeah, I think that makes an excellent concept. So think of, again, case titles. You can really differentiate, add some context around the scenario or even strategy that you're using. And case tags should make it easy to find and differentiate between similar cases with maybe alternate strategies in them. As far as housekeeping and updates, one of the big things was adding those tags. We had a lot of feedback around that over the years, so I'm happy to actually get that in the system. And the other thing that we're working on right now that you should see over the course of the month is really around sales tracking and sales ability. So one of the challenges that we already have in the industry is that information visibility around renewals. So when we sell a policy, it's great. Let's take a 10-year term, for example. But, 7 years down the road when we want to go and review that, getting access to that renewal schedule. Yes, if we photocopy a copy of that guaranteed renewal schedule, throw it in our filing cabinet, it's not accessible and leverageable unless we're constantly entering it in there. And again, insurance carriers are not really able to export this information to bring it in and leverage it. Trust me, if we could get it in the exports that they give us for the client files, normally we can get the initial premium and the initial cash value, but there's no historical and there's no renewal schedule that we can really leverage. Again, life design analysis, again, there are ways to estimate it in the system, but when we're really properly looking to do that review, I know it is frustrating going and getting delayed, having to go to the carrier, request the full renewal schedule, sometimes even receiving a fax of the information. I don't know how many offices even still have fax, but a lot of the times that's the carrier's method of getting that data to you. Now, again, renewals are already a problem, and that data visibility is already a problem. I'll be releasing a piece on this when I release this feature, but I just wanted to give everyone on the webinar a little bit of a preview of what's to come. Now, if we think about term 10s, kind of traditionally, if we had someone who's 40, they'll have a renewal at 50, 60, 70, 80. They'll potentially have 4 to 5 data points of renewals. When we think about some of the new term products, so again, I'm just going to go ahead here and add a term product, just a 10-year term. And again, I'm going to use Manulife as an example. Now, a lot of companies have changed this trend to go to a YRT renewal schedule after the initial premium is up here. And I'm just going to show this here. I'm just going to analyze to age 99 just to kind of illustrate this, what I mean by this. So, again, I see why insurance companies have done this. Again, what typically would have happened was, for the first 10 years, they're steadily paying this premium, and in the 11th year, instead of going from 1,000 to 5,000 and really setting the shock off on the pre-authorized payment, it's kind of a YRT increase. So again, when we look at this over time, it's not the traditional term jump that might jump up to $10,000 here right away. It's something that kind of initially takes a jump and gradually increases over time. Now, again, when we think about these sort of policies, if it's already hard to review something with 4 data points and get access to that information, going forward, it's going to be nearly impossible because each different year is going to have a cost per thousand. So for anyone who's requested an in-force YRT policy, essentially that's what we're going to be looking at, again, in about 7 years when we go forward and try and renew these. So, again, I already see a big problem around data visibility, especially when talking about renewals with carriers. This is only going to get more and more challenging. So what we've done in Life Design Analysis is made a way to make this even easier for you. And those of you who are using our system know that, again, when you're doing kind of your research aspect and when you're actually looking at product and adding them to the case, we do have that full pricing schedule that we get from LifeGuide. And as I mentioned before, again, LifeGuide subscribers get that 50% discount to our software. So what we've added is actually the ability, when we go into the edit plan here, we're going to see that even products that we've searched from LifeGuide, that you can save as a policy and save to that client file, so that in the future when you need to renew it, we've saved everything including that YRT schedule. And let me just show you how this works. So I'm going to go ahead and save that as a policy. It's going to require a few things. So it says if you've sold this policy, you need a policy number in there. I'm just going to enter 1, 2, 3, 4, 5, 6. And the other thing we need to give it is an issue date. So this would be the time that it went in force or when you got the commission paid. So again, I'm going to give it an issue date of today and just update that information by hitting save. Now, what this is doing is it's actually taking all the data from this plan and putting it on the client file. So you'll see if I click on this actual client, again, we're going to get a listing of all their policies. And of course, you can see the policy we just saved. So again, when we go from, preparing these presentations to actually marking one as sold, again, we can actually go in here and we can change that status. So we could actually say, you know what, this one's in force, commission paid, and save that. Now, let's say, some time passes and later down the road, we want to make a new case for Charlie and we want to review one of these existing policies. Well, as you know before, you could still import all of the information from that you had entered before, but now we've added this plus policy for existing policies. So we've moved it from plus manual to say that any existing policy that you want to pull from the client file, you'll say plus policy. You'll simply be able to select the policy number from the list, so 1, 2, 3, 4, 5, 6. You'll see that it's going to retrieve the information and bring in that policy, even from ones that you had searched. And again, this sort of tackles that problem of keeping that renewal schedule. So again, as you use our system over time, you're going to have a solution for this data visibility issue. But again, it's going to become very difficult for policies going forward with YRT schedules to actually review them in the future. So remember, start tracking your sales in Life Design Analysis. All you have to do is go to any case where you've sold a policy, click the Edit Plan button. You can first, again, mark it as sold. You can always update it. Let's say you reduce the face and you want to update and change that schedule. Again, you can always do that. You can change that status of the policy as well. So if, again, the policy status goes from pending to lapsed or something like that, again, you can always go into that client file and edit that existing policy. So again, let's say, for instance, this policy, again, we have in-force commission paid. If it lapses, again, we don't want notifications on it. Again, we can change that status. So a little update of what's to come. Just going to help you review policies in the future more, especially with more of these dynamic changing kind of renewal schedules. And I think we're going to see a lot of that trend in the industry. Jeff kind of mentioned the Turn 30 with Empire actually has that YRT renewal schedule. We see it from Manulife. We see it from RBC. So again, make sure you're marking your policies as sold. This is going to help you review them in the future. And you'll see that feature come out live where essentially plus in-force policies, as what we're going to name this button, is actually going to bring in anything that you've saved to that client file. So that really wraps up our webinar. Appreciate your time today. Hopefully we've given you some good ideas. As always, if you have any questions, get in touch with us. Reach out to us on live chat. If you're watching us for the first time, sign up free, create your account. And if you're on the fence, definitely activate your account. We're here to help you with your casework. We're going to help you increase sales, save time, and increase your compliance. So thanks so much, everyone. Look forward to our May webinar, which will be the Thursday of the month. As always, if you have any suggestions for topics, send them our way. Happy to show and share ideas. Thanks again. Take care.